Good morning, everybody. This is Billy Trout with the Tennessee Department of Revenue, and on behalf of our Commissioner David Geragino and our staff in taxpayer education and the Department of Revenue, we want to welcome you to today's webinar presentation on business tax deductions, which is sort of a hot topic this time of year. Katie will tell you why here in just a few seconds. We're sort of smiling at the same time because we had a lot of activity here in the last couple of weeks with business tax, and we want to welcome Katie, obviously, Julian with our taxpayer education section, who'll be walking you through the presentation. And we have a guest expert from our audit division, Miss Katina Sykes, will be with us here. So welcome, ladies, and we're so glad that you're with us. And we're glad to have each of you with us here today, too. We had a lot of people sign up for this webinar. And of course, we still have a few people loading in at this point. Obviously, we're recording this and it'll be posted on our website. And Katie will tell you a little bit more about that. Want to call your attention to that QR code there. And then I was basically mute out here and let Katie take over with a couple of other introductory things, and we'll move along into the material. So thanks a lot for coming today, guys. Appreciate it.
Thank you, Billy, and excited to have Katina as our subject matter expert on today as well. Thank you all for joining us. As Billy said, we are recording this. The video of this webinar will be available in our webinar video library later today, or at least by tomorrow. You can get CPE credit, those in the tax professional fields that need CPE credit. And I'll repeat this again at the end of the webinar, but when you exit the webinar at the very end, it'll ask you, a little survey will pop up and it'll ask you if you need CPE credit. So like Billy said, there's a QR code here that goes along with a PDF of this presentation. So the hyperlinks that you'll see on this screen and then on future screens when we have some links over to things, you can't actually click on them from this WebEx screen. You'd see that if you kind of hovered over it, it doesn't go anywhere. But if you download this PDF that you can see, if you click on the QR code here, then that PDF will have hyperlinks, and it's the exact same thing that you're seeing right here on the slides, but just in a PDF form. So, and if we do not get around to your question at the end of this webinar, while we're going through the slides, we're going to have the chat closed. As soon as we're done with the presentation part, we're going to have about half the webinar left over to have a discussion and answer your questions that you put into the chat, but we will wait till that point to open up the chat. We have a lot of people in here today. As Billy said, business taxes, it's one of our biggest taxes here in Tennessee, and lots of people on this webinar. So there's no way we'll get around to all the questions, but you can see here on your screen there's an email address and a general tax line number. If we don't get around to your questions, or if you have specific account related questions after viewing this webinar, then reach out to us, and again, we'll share that with you later. So this webinar is in our free taxpayer series webinars. The last Tuesday of every month, we have this a webinar that's on a different topic each month. This month, we're talking about business tax deductions, and I want to spend just a second on this screen just to talk about, because all the questions that came through on your registration forms, a lot of questions seem to be geared towards tax deductions on your federal taxes. So the title of this webinar being business tax deductions, it's actually deductions that you can take on your Tennessee business tax return. Business tax is the name of a tax type here in the state of Tennessee. It's the tax that goes along with your standard business license. Very recently, the last couple of years, there's been a lot of changes to Tennessee business tax. The biggest one being that it is now you're only required to file if you make over 100,000 in gross receipts for your tax year. We're going to talk a little bit more about what defines gross receipts, but if you have a business tax account and you did not make over 100, we welcome you to stick around for this webinar and hear about deductions, but we just want to go ahead and reiterate to you now, you do not have to file, but you do need to reach out to us. If you made under 100 in the last fiscal year, you do not need to file business tax, but you need to reach out to us so that we can mark your account filing not required. So just wanted to touch on that and to make sure we're clear on the fact that we're talking about a tax type, which is business tax, and the deductions that go along with that tax type. Totally different than also the state level federal and excise tax. Those are two different taxes. They're on businesses, so some people get confused with the term business tax, but just wanted to make that clear. And as always, the information you see on the bottom of your screen here, um, information that we are presenting may not reflect legislative and other subsequent changes, business tax changes a little bit each year, it seems like. Sometimes not such big changes as we had in 2023 as with the new threshold change, but it is the general session is Tennessee General Assembly is meeting right now, so maybe some changes coming. So the information you're hearing today, and if you're watching this video later on, it's good as of March 25th, 2025. Hey,
Hey,
Billy.
Katie. Hey, yeah, let me bother you for a second. Going
Yes.
back to your opening remarks, just something, a point of clarification too. You know, the $100,000 threshold that you mentioned, which we desperately need people to contact us if they haven't already made that change. This did also take place in 2023 also.
Mhm.
So a lot of businesses were already converted over, and that's fine. But that we found some that chose not to or did not at that point. So evaluate that situation based on where you're at or where you were at. If you need us to make some changes, we can do that. We can talk to you about some advantages of why that's important if you contact us. So I'm not going to get too lost in the weeds right now on that, but it's important to know that it actually went back to 2023 as well.
That's right. And 'tis the season. Most people are filing, most businesses have a fiscal year end of December 31st, first, so this is the business tax filing season. So this is very relevant right now. So just an overview of what we're going to be talking about today. The Tennessee business tax statutes and rules and regulations allow taxpayers to make some deductions to reduce tax liability. It's important to note that deductions differ from exemptions in that they must be reflected on the business tax return in the gross receipts and then deducted out from those total gross sales. We are going to be talking about which deductions are allowed. We're going to look at how those deductions look on the return, share some resources with you, and then hopefully have a good amount of time to take your questions in the second half of today's webinar. Most all deductions, I will say, are provided for in Tennessee Code Annotated 67-4-711. So just sharing with some resources with you here. We have a great business tax manual. If you've joined us for these webinars before, you've heard about our manuals. They're great. We use them internally. There are manuals as well as yours. So there's a whole chapter dedicated to deductions, and it's chapter 9 in the business tax manual. There's a link here to just the general information business tax page. There's a link over to business tax specific help articles in our help article database, and a couple of webinars, business tax basics and filing the business tax return. We are not going to be going over basics today. I think I have like one slide worth of just some basic information about business tax, but other than that, we're diving into deductions. So if you are new to have owning a business and need just some background information or want a little bit more information about business tax, check out those webinars. You can watch the video of the webinar and also download the PDF of the slides from the webinar in our webinar video archive. So just some basics about business tax here. Business tax is gross receipts. We'll define that here in a minute, but your gross receipts for your business times your business tax rate. And that's based on what classification you are, which is based on what type of business you have. Also, it's based on whether you're a retailer or a wholesaler. And then minus a few deductions and credits that we have out there. There aren't a whole lot. It's not like when you're filing your federal return or even your state franchise and excise where there's lots of ways to quote unquote write things off. There's not a lot of that in with Tennessee business tax, and same with credits. There's just not a lot, but and that's going to equal your tax due. So gross receipts times the rate minus some deductions and credits. Tax due on the 15th day of the fourth month following your fiscal year end. That's what I'm saying for most businesses with a December 31st fiscal year end, we're looking at April 15th. So we're inching very close to that right now. Okay, a few definitions that we're going to discuss now. Gross receipts, one of the most important definitions when it comes to business tax and one of the most misunderstood uh, as well. Gross receipts is all the business location's taxable sales without any deduction whatsoever of any kind or character. So for example, your overhead, your rent for your space, what you pay to your employees, we're not taking any of that into consideration right now. We're just looking at the gross sales, your gross income. I like the term gross receipts because in my head I literally think of receipts, what all came in. And then what is not included in gross receipts, you can see here, exempt sales. There are certain services that are just exempt from business tax. We're not talking about that today. In the business tax basics webinar, we touch on that. There's also good information about which types of services are exempt from business tax in our manual. You're not going to include those. Like for example, veterinary services are exempt, but some things that vets offices might sell, like pet food and pet toys and stuff like that, those are not exempt. So those need to be, business tax is based on tangible personal property such as that. So exempt sales and certain entities, persons, and activities are excluded from business tax, manufacturers, stuff like that. Those are not going to be included in your gross receipts, just not even included in there, exempt sales and exclusions. But yes, Katina, please join in here. Oh,
Thank
you're on
you,
mute. There you go.
thank you, Katie. Hi, everyone. I just wanted to emphasize something on the gross receipts. It is all, like Katie said, the taxable sales without any deductions, but that's business income, which also is going to be commission. So if you're a commission-based business, that is a sale as far as the gross receipts is concerned because it's the business income.
Absolutely. And same with services that are not exempt. Some people say, well, I don't sell a thing, I have a service. So again, more information about that. Thank you for adding that in, Katina. More information about that in our manual. But what is included in gross receipts are things that you're going to later remove out to offset. Credits can offset the tax liability. The most common credit with business tax is what you've paid in towards your local personalty or personal tangible personal property tax. And then, of course, what we're focusing on today, which is the deductions, which reduce your tax liability. So most important thing to understand here is that the things that you're going to later deduct out need to be included in that line 1 of the business tax return, gross receipts, and then you'll deduct them out later. So here are the allowable deductions. They are all taken on Schedule B of the business tax return. We are going to be touching on most of these today. For the sake of time, I'm not going to run through this list because we're about to get into all of them. One very important thing to note here, and Katina as an auditor can attest to this, you must maintain invoices, records, documents to substantiate any claims that you're making for deductions, or else those deductions will not be allowed. So you just want to make sure that you keep really good records if you're going to have any deductions. All right, so diving right in here, the first deduction that we're going to talk about is cash discounts. And this is not a very common thing, but taxpayers can deduct cash discounts allowed and taken on sales from their business tax base. And the example that we have here, you've got a taxpayer, a business that's offering customers their vendors cash discounts on credit sales to accelerate collections. A cash discount indicates that the customer will receive a 2% discount if it pays the invoice over 10 days. Otherwise, payment is due within 30 days. On a $5,000 credit sale for which the customer takes the cash discount, it's calculated like you see here. The gross credit sale is $5,000. That's the $5,000 that's going to be included up in gross receipts, minus a cash discount that they got, which is that gross credit sale times 2%. And that $100 is what you're going to put. It's on line 4 of the Schedule B for the cash discounts. And that's going to be result in a net credit sale of $4,900 that's subject to the tax. You got the $500 that's going to be listed up in your gross receipts, and then line 4 of Schedule B under the cash discounts line on under the deductions is $100 for that cash discount. So line 4, again, enter the amount of the cash discount that's allowed and taken on the sales that are made during that business tax reporting period. Okay, returned items, probably a lot more common one here for a lot of retail shops. It's on line 2 of the Schedule B, and it's where you're going to enter the amount of returned goods, wares, or merchandise for which the sales price was refunded, either in cash or credit to the purchaser. The amount should equal the amount reported on the sales tax return, Schedule A, line 5, just incidentally there, for the business tax reporting period purposes. Before I read this example, the bullets at the bottom, I just want to go ahead and say too that even if you don't take in the item in return and just give them, you say, you know what, that didn't work for you, just you can throw it away if you want to. That's happened to me before. When I've ordered something online, they've said, we'll refund you, but just you don't have to send it back to us. You can still get the deduction for for the credit or the refunded amount that you gave to your customer. So the example here, taxpayer sells an appliance to a customer for $250. The customer returns the appliance stating that it is faulty and requests a refund. The taxpayer issues the customer a refund by crediting the customer's credit card. It could be given in cash, whatever, but in this example, crediting the credit card. The taxpayer, the business, may deduct the sale proceeds for this returned item from its gross sales. And again, that is on line 2 of the Schedule B. Now we're going to talk about trade-in allowances. Billy and I's team works closely with a lot of the county clerks, so we deal with this question a lot. Katina was telling us when we were working on this that it's not something she sees a whole lot out there, but again, we deal a lot with it with county clerks because they are dealing with a lot of vehicle stuff. So line 6 is the trade-in allowance on Schedule B. It's where you're going to enter in the total amount allowed as a trade-in value for any articles sold during your business tax reporting period. So we've got an example here that includes a vehicle because that's very common with vehicles, right? Just like I was saying. So a customer purchases a new car from the taxpayer for $30,000. As a part of the transaction, the customer trades in a used car for which they're given a trade-in value of $9,000. How does that look on the return? The taxpayer is going to report on the business tax return the gross sale, include that $30,000 up in line 1 gross receipts, and then on line 6 of Schedule B, going to reflect the $9,000 trade-in value. A couple of important things to remember about trade-ins here. A trade-in must be of like kind and character. In other words, you can't trade in a refrigerator for a vehicle. That's probably a weird example because I don't think people would trade in a refrigerator, or a sofa, let's say. Okay. You can't trade in a sofa for a vehicle. That would not be considered a like kind. And just for record keeping purposes, you're going to indicate that trade in by model and serial number on an invoice. That's part of the record keeping to where we know what was traded in. Yes, Billy.
Katie, so yeah, you're right. And the thing is to understand here is we're not trying to tell a business owner what they can and can't do. So in other words, if you want to take a couch for a car, you can.
Mm-hmm.
You can do it. You can give the customer credit for it. You just can't give them credit for it on the business tax
Good
return.
point. Yep.
And this also, just FYI, this also is the same way for sales tax. Same
Yes.
thing. So that's just the key thing to know, because sometimes businesses are like, well, you're trying to tell me I can't take something as a trade. No, you can take what you want as a trade, but we're just telling you can't get any tax advantage for it unless it's like kind. Okay.
Thank you. And if you have any questions about what's considered like kind, that does come up sometimes. I think that just reach out to us. I think that it's a standard that, for example, a boat and a vehicle are considered like kind because they're both vessels. All right, a motorcycle and a vehicle can be like kind because they're both motorized vessels. Okay, so this one's a little trickier. Repossessed goods. So when a taxpayer repossesses property that is sold, this is again very common with vehicles. If it's sold pursuant to the terms of a security agreement, um, the business can take a deduction for the difference between the remaining amount due on the selling price of the repossessed property minus or less $500. This can get a little bit complicated. It's on line 5 that you're going to, of the Schedule B on the return, that you're going to enter the portion of the unpaid balance in excess of 500 due on all items of tangible personal property that have been repossessed. I would think, a dealer that's a buy here, pay here type of dealer, vehicle dealer, is going to have this happen, and it's going to be probably pretty common in that industry. The amount should equal the amount reported on the sales tax return Schedule A, line 8. As well. And I will say there is a worksheet that is out there now. It's not on our business tax page, but in order to calculate the repo item, the repo line, it's on the sales tax. If you go to our sales tax page or in the sales tax return, I didn't realize that till I'd already published this PDF. It was kind of last night when I was doing some work that I realized that that is out there for sales tax. But we're going to look at an example here. I'm not going to spend a whole lot of time on this, but I just wanted to put it here for you. If this is an industry, if your industry deals with repossessed goods, this example might help you to understand actually how you take the deduction and how you report the deduction. All right, going to spend a little bit more time on this topic because very common here, subcontractor payments. Yes, Katina, you want me to go back, or you jumping in on some subcontractor payments?
Yeah, no, if you could go back, Katie,
Okay,
please.
got it. To this
I
slide.
I just wanted to expound on what you said, that this repossession credit is particularly for those taxpayers that are holding the note to the property, and those calculations they're only going to be able to deduct the amount of principal. It's principal only. That, and then if you have some situations where taxpayer sells the notes,
Mm.
so they note with recourse, I mean, they sell the note to the bank with recourse, that bank can come back if they're not able to unload that and be reimbursed from the taxpayer if it's sold with recourse. But if it's not, if it's without recourse, then neither that taxpayer nor the bank or whomever they sold it to is able to take that credit.
Oh, okay.
Okay.
That is good to know. And is there more information about that in our manual? Do you know, Katina?
I believe it is.
I think so too.
Yeah.
It's a pretty complex topic, for at least the way my brain works. The repossession
Yeah.
deduction is pretty complex. Thank you for clarifying that for us.
You're welcome.
So for subcontractor payments, this is a deduction that can only be taken by Class 4 contractors. So Class 4 contractors are contractors who do make improvements to real property, service or make improvements to real property. We're not talking about, any other kind of contract work out there, just what you mainly think of like home builders, that type of contractor. You can deduct amounts that are paid during the period to a subcontractor that holds a business license or a contractor's license. There is a special schedule for these deductions. It's the Schedule C, payment to subcontractor worksheet. This worksheet has to be completed fully for the deduction to be allowed. Very important there. Must be filled out completely. It's lines 8 and 9 on the return. One's for county, one for city, because for class 4 contractors, that's kind of split out there. There is a link here that you can, if you've got the PDF for this presentation, it's for info about uploading a CSV file, which may be easier for those of you if you're a contractor that makes a lot of payments to subcontractors for your jobs that are going to be included in gross receipts. It might be easier for you to upload a CSV file of that information. What is considered a subcontractor? Basically, just a contractor that holds a business license and is licensed by, has a contractor's license. A contractor cannot deduct out, for example, materials. That's not considered a subcontractor. Only subcontractor payments can be deducted. All right. I'm going to go back one more real quick, just so you know, if you're not familiar with the way on WebEx, there's a little plus sign above your screen there. Depending on what view you've got, you should see a little plus in mine. So that helps you zoom in and zoom out, because there are a few slides I've got here, including this one, if you wanted to zoom in and see what kind of information is there on the worksheet. I've zoomed in on mine. I don't think it zooms in for y'all when I zoom in on mine, but if you wanted to zoom in on it, the items that you're going to have to provide there are name of subcontractor, the address, the business license number, what county or city they're licensed in, the contractor license number. Now, I will say they need either or, business license or contractor number. Most are going to have both, but based on the laws, there may be a subcontractor that's just kind of more small time, doesn't quite need a business license for the county that they're working in, something like that. But really, you need either that contractor license or business license number provided, and then a description of the activities provided, the amount paid, and the date paid. All that information needs to be filled out on that Schedule C. Okay, pretty common deduction here, sales of services delivered to a location outside of Tennessee. One thing I want to just focus on here, we're talking sales of services. There's another deduction that's sales of tangible personal property. We're talking about services here, which is a little bit more confusing for some people, but this is on deduction on line 1 of Schedule B. That's where you're going to enter all sales of services that have been delivered to locations outside of Tennessee. For periods after January 1, 2026, you can deduct the sales of services delivered outside of Tennessee. That is language that was changed due to the Revenue Modernization Act. So 16
2016, Katie,
forward.
not 2026.
Oh, see, I'm
See,
already looking to the future.
I
Thank
didn't
you.
know you were clairvoyant, but that's pretty
I
cool.
am.
Nice.
Thank you. Thank you. Thank you.
All right. Anyway, thanks.
Yes. Commissions derived from services performed in Tennessee on behalf of an out-of-state business cannot be deducted from business tax, as the commissions are derived from services delivered in Tennessee. We're going to look at a few examples of these sales of services and what would be deductible and what would not be deductible. A couple of examples of things that are deductible. A Tennessee computer repair company repairs a computer in its Tennessee shop for an Arkansas customer. After the repair is complete, the computer is shipped via common carrier back to the customer. That would be an example of a deduction that you can take, a sale, deductible sale. Another example of a deductible sale, Tennessee web designer creates websites and advertisement templates in Tennessee that are stored on a designer's server in Tennessee. A California customer pays the designer a monthly fee to remotely access and use the templates. The software always remains on the Tennessee server, but the sales from the web designer's services provided to the California customer are deductible. And I will say these are kind of more kind of out there examples because this topic can be a little bit more complex. Georgia, third example here, Georgia Trucking Company has a truck that breaks down in Tennessee. A Tennessee mechanic repairs the truck in Tennessee, and they're going to send that bill to the Georgia address of the company, but it was repaired here in Tennessee, okay? When the truck is repaired, the driver picks up the repaired truck from the mechanic and returns the truck to Georgia. That would be an example of a service that is not deductible from the business tax base. All right, moving on here to a similar topic, but we're talking about sales of tangible personal product or things in interstate commerce. So that's line 3 of Schedule B, where you'll enter all sales of TPP that were delivered either by the taxpayer or by common carrier, where the purchaser takes possession of the property outside of Tennessee for use or consumption outside of Tennessee. So we're not talking about if you've got a shop located in Tennessee, or I live in Chattanooga, you got a shop in Chattanooga and someone comes over from Georgia and purchases something from you in your shop and walks away with it. That's not a sale in interstate commerce, even though the customer lives in another state. If you were to ship an item to that customer, they purchase it and you ship it to them, if they take possession of it outside of this state, then it's considered a sale in interstate commerce, and those are deductible. A couple of examples here. A taxpayer receives commissions for custom artwork through their website from customers located both within and outside of this state. Once completed, the taxpayer ships the artwork to its customers via common carrier. That taxpayer the artist can deduct the sales of commissioned artwork that are delivered to customers located outside of the state, but they not deduct the sales to in-state customers because they're shipping it to outside of the state. The customer's taking possession of those items outside of the state. All right, this one's interesting. A Tennessee car dealer sold a car to a customer that is out of state, that's an out-of-state resident. The customer came to the dealer's lot to purchase the car. After the purchase, the customer took possession of the car and drove it off the lot. The customer utilized a 3-day affidavit to purchase the car exempt from sales tax. However, because the customer took possession of that vehicle here in Tennessee, the dealer, the business cannot deduct the sale. That's where sometimes you've got to we've got business tax and sales tax that a lot of businesses are liable for remitting, but they have similar but different rules, and it can get a little bit confusing in some places, and this is one of them. That customer will use that 3-day affidavit to not have to pay sales tax, but the car dealer would still have to would not be able to deduct it out from their gross sales and business tax because that customer took possession of it here in Tennessee. All right, just a few more to go through here. Bad debts. Taxpayers can deduct from their gross sales bad debts that arise from sales on which the taxpayer previously paid business tax. It's on line 7 is where you're going to enter the total amount of bad debts written off during the business tax reporting period and eligible to be deducted for federal income tax purposes. I'm not going to spend a whole lot of time on this one because I feel like I'm talking too much and I want to leave enough time for questions, but good information about this in our manual. The bad debt deduction can be taken on the business tax return for the period during which the bad debt is written off as uncollectible. Taxpayer takes bad debts, can't say that word, deduction for business tax purposes, and the debt is subsequently collected in whole or in part. If that happens, then the amount collected will be subject to business tax. So if the customer makes right on it down the road after the deduction has been taken, then that amount's subject to business tax. If the amount of bad debts deduction exceeds the amount of gross sales for a period during which the bad debt is written off, you can file a claim for refund because, again, that bad debt is going to be reflected on the Schedule B, line 7, during the period when the bad debt is written off. And if that means that it offsets things enough to where there is a refund there, then so be it. You can claim for a refund. All right, so miscellaneous federal and state excise taxes. These are reflected on several different lines in Schedule B, but in calculating the business tax, you can take a deduction for these taxes, provided that the deductions are claimed only by the taxpayer who made direct payment to the applicable government agency. So these are taxes that you as a business are paying to the federal government for excise tax imposed on on beer, gasoline, motor fuels, tobacco products, to the state of Tennessee for gasoline taxes, so on and so forth. A little bit more information about this deduction. Tennessee sales and use taxes and liquor by the drink taxes, and now there is a new hemp tax that's included on the sales tax return currently. Those are taxes that you're collecting from your customer and then remitting over to the state. You're not going to include those in your line one gross receipts. I should have mentioned that, and there's more information about it in our basics webinar or in our manual, but those sales tax that you collect from the customer, liquor tax that you collect from your customer, you're not even going to reflect those in gross sales. If you were to put them in your gross sales, then you would need to deduct them out on the kind of miscellaneous, it's called other deductions, but to keep it cleaner, don't even include them in your gross sales. Tennessee bail bond taxes that are required to be collected by a bail bondsman should also be excluded from gross sales. But again, if not, then if they're included in gross sales, then they should be deducted out. The deduction does not apply to contractors' use tax on materials that the contractor purchases to fulfill its contracts. That's because the contractor is not permitted to directly pass this tax along to its customers. Okay, so here's kind of a catch-all other deductions. There's actually a line on the Schedule B. It's line 19. It says other deductions not taken elsewhere on the return. Some common ones might be student to school to student sales, accommodation sales. Accommodation sales are sales sale for resale of tangible personal property at cost plus freight or storage to a person who regularly sells such property to another person. So a dealer to dealer sale. Public warehousing and storage, motor vehicle rentals, funeral director, cash advances. Folks, these are the only deductions that you can take. If I haven't mentioned them during the last 30 minutes, there is not a deduction for it in Tennessee law in Section 711. It is just not there. Lots of questions in your registration forms about what about, can I deduct out medical expenses? Can I deduct, what about if I have a home office? Is there anything I can deduct for a home office? What about meals and entertainment? Separate out in your brain. This is Tennessee business tax. Now on your federal taxes for your business, lots of that you can deduct out, write off, so to speak. But if I have not mentioned it in the past few slides here, or you don't see it listed here, there is no provision in Tennessee law for the deduction. All right. Real quickly, I wanted to show you what it looks like. Of course, online filing is required in Tennessee, unless you have a waiver. And the way it looks, and if you want to use that little zoom button on your screen here to zoom in, you're going to answer a few questions at when you first open up a location's return. Do you have sales? Blah, blah, blah. And then there's a question that's going to say, do you have deductions to report? Right here. Do you have deductions to report? See the little red box next to it? Not my laser pointer, but the little red asterisk. That means it's a required question. You have to answer yes or no there. If you answer yes, that is what expands a Schedule B for you. If you answer no, you're not even going to see a Schedule B. All right, and the way the deductions look here, this is just everything I just went through with you listed out. And of course, all those taxes are listed out separately. That's the way it looks on the return. All right, I'm going to go ahead and open up chat. Billy and Katina, if y'all want to join back in here.
Okay. Thanks very much, Katie. Um, yeah, I put a few things in the chat for people to consider there too. And as much as you did such a fantastic job of going through the different kinds of deductions that are available, I put something in chat that I thought was sort of important because we see, literally thousands of business tax returns come in every filing season, and a great percentage of them have zero deductions. And the reason for that is because, as Katie explained to you, your type of business probably doesn't even qualify for any of these deductions. Now, say that to say this, contractors using subcontractors is a very common situation. So I want to just reiterate what Katie had to say about that and how important it is to make sure that you get that business license information or that contractor's license information. And, Katina, you may want to weigh in on this too. I mean, from an audit perspective, I'm sure that you're looking for that information so that we can make sure it's a valid deduction. Do you agree with that, Katina?
Absolutely, yes. Every deduction, exemption, credit that you claim on the return has to be supported. That's why those record retention is so critical, because if it's not supported, it will be disallowed. So yes.
We are getting tons of questions coming through to this panel here. Again, we're not going to be able to answer all your questions, but I'm going to get to just a few. Here's a really good one right here. Oh, it just went away from me. Is personal property tax considered a deduction? That is a great question. That's actually what you pay in personal, what you pay, the business pays in personal tangible property taxes is going to be a credit. We're not talking about that today, but it's pretty simple, and there's more information in our manual about it. We may do a webinar about that in the future, but it's pretty simple. But that is a credit, not a deduction. So the
Right.
slight difference
One
there.
big thing on that, Katie, that a lot of people don't realize, they think it's their real estate per
Right.
property tax. It's not. It is not your house, things like that. This is a tax that's on merchants' inventories and other things like that too. Katina, do you want to weigh in on that too from your office?
Right. It's the assessments that's done on the things you use, the computer, the desks,
Hmm.
furniture, all
Right.
those capital assets that you hold in the business that you're going to be subjected to the tangible personal property tax on.
Hmm.
And that's the only credit that is on the business tax return is tangible personal property tax credit. And you're allowed to take uh, up to half of your tax liability, but it also has to be amounts that you actually paid. So
Right.
if you have tax liability of $100 and you paid tangible personal property of $20, that's the max credit that you're going to take, even though it says that you're able to offset up to 50% of the tax liability, but you only paid the 20, so that's the cap.
Hmm. And these are assessed by local county property assessors and also city property assessors as well. Maybe not every business that pays business tax even pays this tax.
Right.
Depends on the nature of what you're doing. So again, just don't make sure you're not putting your mortgage tax on there, or your tax on your real property, because that's not what we're talking about. It's tangible personal property. Tabitha had a question, talking about discounts. If you have like discounts and that is, how does that affect your gross? Essentially, I'll answer that. When you have a discounted price, you're selling that for a lower price to your customer. So essentially, you're not going to have to pay tax on something that the customer never gave you. So that discounted price is what you consider when you come up with your actual gross. So if you have a point of sale system that can report that out to you, for whatever reason, your point of sale decides to put the regular price and then the sales price in there. Well, what we're looking at is what the actual transacted price is, which is gross. Okay. And that's an important key concept. You don't deduct out what that discount would be, because that's not the same thing. Okay. Does that make sense? I hope so anyway. Esther, you asked if the slides are available. Yes, we'll put them on our website. And just like we said in the chat, um, they'll be on our website later today. And actually, the PDF is already out there, and Katie had a QR code on that earlier.
I'm going to put a link to it in here again real quick.
Okay, that'd be
In the
great.
chat. Here we go. I hope I didn't lose it here. A question from Amy. We are a general contractor, so if any of our subs have gross receipts less than 100,000 and they're not required to have a business license, can we not take the deduction on our business license? Actually, they can get a minimal license. You need to provide on that Schedule C worksheet, subcontractor worksheet, either a business license or a contractor's license. So you may want to consider that when you're hiring that subcontractor. They may not be required to get a business license, but if you want to use the deduction and want to hire them, you could ask them, hey, could you go get a minimal business license? It's $15 from their clerk's office. We need something. Now, I don't know what the thresholds are. I've known this before, but I don't know right now off the top of my head what the thresholds are for a contractor's license. I think it has to do with the amount of work they're doing. Don't quote me on that, but if they don't need a contractor's license for whatever work they're providing for you, and they fell within under that $100,000 threshold to require a standard business license, yeah, if there's no license there, you can't deduct it out. So you may want to tell them to go ask them if they would go get a minimal license. We need a license number on that Schedule C. Is that right, Katina? If we don't see a license number on there, is that an example of it
Oh,
being disallowed, kind of?
yes, that form has to be completely
Yeah.
filled out.
Okay.
Mhm.
The like someone providing landscaping services, that's not going to be a valid subcontractor
Right.
payment. So anyone doing business in Tennessee should have a license. They may have the minimum, depending on the threshold. You know, they could have the minimal activity license from $3,000 to $50,000. But if you're doing business in Tennessee, you should have a license. Um, so, like I said, that the landscaping services may have a license, but that's not a contracting uh, class 4 type of activity that would be allowed as a deduction for subcontractor payment. So
Okay.
if it's
Um,
listed on there, even though it may have the license, if it's not a contracting activity, it's still going to be disallowed.
That's
yeah,
a
that
good
makes
point.
sense. That
Mhm.
makes sense too. Sherry asked a question too about retail or wholesale, about service-based businesses. Do you choose retail or do you choose wholesale? I think it's important to know that the terminology that we have to use on tax returns and other official information is based on what the law calls it, retail or wholesale. But, in general, if you're a service-based business, in almost every case, you're going to be retailing your service to the end user. So you would choose the retail rate. There may be a few exceptions where that's not the case, but I think that's very rare. Katina, does that sound right to you?
Yes, absolutely. So
Okay.
if you're not reselling the service as such, then you're going to default to retailer. That comes up a lot.
Mhm.
Generally, the services are going to be taxed at the retail rate.
And the reason that's important is because, like Katie mentioned in her presentation, is that the different business tax classifications um, are a lot of them at different rates for retail versus wholesale. That wholesale rate will be a little bit cheaper than the retail rate. And just an FYI here, that's something we didn't talk about at all, but maybe it'll help you ease your mind a little bit. Every one of our business tax rates is less than 1% and way less than 1%. Okay. So, we're not talking about a giant amount of money, especially if you're a small business. This is not a huge amount of money that you end up having to be responsible for. However, it's important to do it right, and you don't want to overpay either. That's why when we get back to the general discussion that Katie mentioned even before the presentation, where we were talking about if you're under the 100,000, you should really go ahead and convert your account over to the minimal activity license status and not pay us tax. We agree with that. We will accept your tax payment and you can put it into our system and you can get your license like you've always done, so to speak. But we strongly encourage you not to do that because for many of you that are in that situation, you'll be overpaying. And that's not good. We don't want you to overpay. We want to help you. We want to help you make the right decision for you, but we also want you to be assisted in the way that you want to be. And that conversion thing is something that we've done in the past few weeks, Katie. I don't even want to count the number that we've done. We've done lots and lots and lots and lots, and we'll do more because we've got a few weeks left in the filing season here as we record this presentation today.
Here's another question about subcontractor deductions from Susan. Can the fee for a concrete pumping company be deducted, or does it have to be a subcontractor that's actually building something? I'm going to go over to the manual real quick and just share with you guys the definition of. So I'm in our business tax manual, and I'm on page 54. This is the definition of a Class 4 contractor. Can y'all see that okay?
Yes, I can see
Okay,
it.
because it's kind of split on 2 pages here. Class 4 activities includes all persons contracting, performing a contract, or engaging in the following. All right. Constructing or improving real property. That means constructing, building, erecting, repairing, grading, excavating, drilling, exploring, testing, or adding to the building, to any building, so on and so forth in any way. So I would say that pouring concrete is considered that's a subcontractor payment that I would, if all the other information is in there,
I'm
that would be deducted. What do you think,
I'm
Billy?
gonna ask Katina about that because I have an alternate opinion, but I want to hear
Okay,
what she has to say. What do you
let's
think,
hear it.
Katina?
I'm sorry, guys. I was uh,
You were
Looking at
looking
the
at
through the
question.
you were
chat.
looking at other questions.
I was-
All right, so here's the scenario that Katie was talking about. A concrete pumping truck comes up to a work site and pumps concrete into foundations. Let's just say, right? Well, is that a contracting activity? Yes or no? What would you say, Katina?
yes, they're pumping concrete
Okay.
to lay a sidewalk or to fill whatever to improve to repair it. It's down there in the repairing, the adding to the building. Yes, that would be
So you believe that the
considered a
act
class
of,
four
of
activity.
them physically pumping the concrete into a foundation would be a contracting activity, right?
Yes, they're adding to
Okay.
that to the building of that
Okay.
construction. Yes.
Okay. I think this is different than if, let's say, a big giant truck comes up from a local lumber supply company and drops off a pallet of 2x4s and framing materials and roofing stuff. Because I don't think they're a contractor. I think they're just delivering materials.
Materials.
They're just delivering the
Mhm.
material.
Right, right. It's just
Right.
like going
I
to
see
the
where you're going
store.
with this, Billy. See, this is y'all, this is a great example of the conversations we have all the time where it's
Yeah,
like
this is
the
why
law is not super clear on certain things and
no,
you've got to
it's
talk it out.
not. It's
Yeah.
not, and we wouldn't anticipate everybody knowing all this stuff. And we learned this stuff after being around for a good long time and everything.
Mhm.
Katina's a Katina's she's getting ready to leave us here before too long. She's trying to get out of here. She's only been how long you been with the state, Katina?
Nearly 30 years.
30 years. What a quitter. That's crazy.
Thank you for your service, Katina.
You're
Absolutely.
welcome.
There'll be
That's
a lot of
awesome.
knowledge walking out the door when you
You're
retire.
Yeah,
welcome.
that's great.
So that's a good question. I would say if you want to send that to us, we'll discuss it. If you want to email it to our, I'm going to go ahead and actually while we're talking about that, because we're inching towards the end, I'm going to put it on this screen. This is where you see our email address, revenue.support@tn.gov, and our general tax line, 615-253-0600. While I'm at it, just go ahead and have a look at all the other information on this page. Follow us in any way that you would like. We put out a lot of good information all the time. So but definitely reach out to us. I can't find, we've got so many questions in the chat right now. I can't find where that one went and who it was from, but please send us that email, question email, and we'll discuss it further. We've got a few more minutes for questions, Billy and Katina.
I've got one for Katina. So when we in audit, Katina, what do y'all look for? And Tabitha had this question about what do you look for documentation about bad
Mm.
debts? How would you look at for information on that? Not necessarily the procedure, but what points you towards a valid deduction for a bad debt?
Um, it has to be written off on the federal tax return, so I would
Okay.
start there.
All right.
they've
So,
written that debt off. They have, the general ledger or some schedule that shows the customers and the amounts that they have written off in that period, um, and it was taken on a federal tax return.
okay,
I would,
that's a great answer. Yeah, that
yeah.
makes sense because you're declaring that federally, and we will just basically buy off on that because of that too. Yeah. Can business tax be amended? Oh, absolutely. Every tax return we have can be amended. If you've got a issue on this that you need to be fixed, let us know. One thing that I will point out, going back to the $100,000 thing, and how I mentioned the fact that you don't want to necessarily pay that tax. If you have paid a small amount of tax, then what you'll end up doing is if you amend your return and take that away, you'll have to go to the county clerk or to the city and pay for a minimal activity license, which is $15 each. So there are a number of businesses that have said to us, hey, I know I paid a little bit of tax. It's a little bit more than $15, but I just don't want to mess with it. Is that okay? Can we just leave things alone? Sure, absolutely. You can do that. We're not requiring you to do it. This is your decision to do. But if you need to amend, you need to change or whatever, we hope you do it up front. Work with us now so we can make this change before you file. But if you need to back into it, let us know. We'll fix it for you. Okay. What else is out here that's interesting,
I'm going to
ladies?
grab this one from Audra Lee. I don't know if I pronounced your name correctly. I apologize if I didn't. Are the gross receipts based on all receipts, even those out of state, not just Tennessee? So if I have a Tennessee business that does $25,000 in sales, but $100 sourced to other states, this is a perfect example of, I'm going to go back here to services and tangible personal property delivered. There's a few slides here. Services delivered to a location outside of Tennessee, but I think maybe you're referring, Audra Lee, to maybe some product. I don't know why I'm getting that vibe from your question, but um, your sales are $100,000. Your sales are sourced to other states. So if you are mailing, if you are shipping, if the customer is receiving that product, so for a lot of online businesses, web-based businesses, you're shipping stuff, right? Those are examples of sales of tangible personal property in interstate commerce. So what you
Mhm.
would do there is include them in your gross sales in your big amount on line 1 of the return, and then deduct out the ones that are sales in interstate commerce where you're sourcing it to outside of send it where the key word with sales in tangible personal property interstate commerce is where does the customer take possession of the item, and outside of the state, are they, do they live in Arkansas, but they came into Tennessee, into Memphis to buy something, or walking away from it, from that Memphis store with that item? That's not interstate commerce. If they're, even if they're taking it home with them to Arkansas, if you're delivering it to them in Arkansas or to any state, that is a sale in interstate commerce.
The service part of that, like Katie said earlier, does get very complicated,
Hmm.
and every taxpayer does things just a little bit differently. So I would advise, calling to get um, some clarification on that. But the sales of
Yeah.
services that are delivered outside of Tennessee and is benefiting the customer outside of Tennessee, then those would be situations where I'd say yes, take take the deduction as interstate commerce. You can be in Tennessee and providing a service for someone who a customer that's physically out of the state, but they have Tennessee customers, and that service that you're providing for that out of state company is benefiting a Tennessee customer. In that situation, then no, you wouldn't be able to deduct that as interstate commerce, even though your customer client has a billing address that's out of state, because the benefit of the service went to a Tennessee customer.
Mhm.
Interesting caveat there. Yeah.
Yeah, that makes sense because that's what you're looking at is activities in the state. Going along with one final question here, because I know we're wrapping up. One of our participants today asked if they received products from outside the country or even outside the state, I guess you could say, and they want to sell them in Tennessee. Do they pay business tax on that? Well, of course you do. Yeah, absolutely. So you're set up in Tennessee, and you're going to be reporting your Tennessee-based sales here. It doesn't matter where it comes from. It could come from another country, another state, in Tennessee. Doesn't really matter where it comes from. What matters is you're generating gross income in our state, which is generally subject to business tax, unless it is, like Katie and Katina were just saying, interstate commerce. Of course, that's excludable. And we don't want you to have to pay on that. But for the in-state sales, they're very taxable. Okay.
Yeah, it doesn't matter where you're getting your um, merchandise to resale. You
Mm-hmm.
know, your inventory can be coming from Mars. Who cares?
Maybe
Right.
someday.
Right.
Yeah.
So it's who you're selling it to and where they are receiving it.
And I want to
Right.
refer you all back to, we do have a webinar dedicated to filing the business tax return and a webinar dedicated to business tax basics that are great webinars. You can view the PDF of them or watch the video. Always an hour long, except for this one's been an hour and 1 minute. Apologies. We did start a minute late in our defense there.
Right. Right.
But we're going to have to go ahead and wrap things up. Katina, thank you so much. Thanks for all your years of service to the state and especially for helping us with this webinar. Really appreciate
Thank
it.
you. No
Yes, we
problem.
appreciate that. And
Um,
thanks, Katie, for doing a great job like you always do.
Thank you. Some information about upcoming webinars here the last Tuesday of the month, next month, taxes for wineries, distilleries, and breweries. We've got one in May coming up on professional privilege tax, and then we've got a new business workshop coming up. On your way out, please take a minute to answer the survey questions. Let us know if you've got any ideas for future webinars, any feedback, and then of course, if you need CPE credit, let us know. And then if you could just include in there the way you want your name listed on your CPE certificate. Thank you all so much for joining us, and we look forward to seeing you soon.
Thanks, everyone. Bye, everybody.
Bye bye.